Good morning, our dear guests. Well, honestly, we expected to see more people here, but nothing can be changed. I'm Sergei Starchak, Deputy Minister of Finance. Probably you don't know me, some of you at least. And today, our panel will discuss a very delicate topic relating to the problem перевод.
Английским все, нет, или с русским? С английским?
Can you hear me, the English speakers? Can you hear me? Shall we switch into English? So, 6.
Friends who came to us that we would better switch to English. As far as most people here sitting in this hall, they know English and they can understand. So, and as far as we have in our panel, most people speak in English. So we will switch. It's not a general rule. It's not a general rule, but still, it's very important to understand each in a better way. So what we're going to discuss during this meeting is the legal aspects of activities in the field of managing sovereign wealth funds, plus legal aspects of activities in the sovereign debt management. It's a very, very delicate issue from many points of view, and the history of setting up Russia's agency for managing sovereign wealth funds proves that it's really a very, very fine issue. Just a couple of examples from the history of decision-making in this field. So, for the first time, the President of the Russian Federation issued special instructions in the field back in June 2008. He was very precise, saying that it is absolutely necessary to have in place a special structure which would manage the sovereign money accumulated in Russia's reserve and wealth fund. Later on, in his speech to the State Duma, Russia's president once again mentioned the necessity to set up this agency. In August 2009, Ministry of Finance of the Russian Federation prepares some changes to a number of federal laws. But after precise discussions, it was these amendments to the laws were never accepted. So, and these activities, I mean, we prepared the amendments. They were not accepted. Documents came back to the Minister of Finance. These movements of documents repeated a number of times. So, from one side of the story, we had political decision that the agency should be in place, should work, should be set up. And from the other side of the story, each time we failed to overcome some legal obstacles while we tried to move towards these directions. So, this is the background of the idea to discuss the situation, the linkage between financial side of the story and legal side of the story dealing with the financial agency during this conference, during this legal forum. We expected, frankly speaking, big interest. That's why we asked our friends from different nations with deep experience in the field of debt management, both administrative, legal, financial, to come to us and to discuss with us in more precise way what is happening and why we are still where we were 6 years ago. So let me introduce to you our panel and our speakers who would share their views on the situation in more precise way in comparison to what I have just said. So our first speaker would be Svetlana Chevskaya, the head of legal department of the Ministry of Finance. So after her, we will listen to the opinion of Mr. Herhard Schleif, former General Director of Financial Agency for German Republic. So Herhard is just opposite on the other side of our panel. Nearby we have David Sable, the partner to Cleary Gottlieb Stephen Hamilton, well-known legal company, but for us it is more important that for more than 20 years David worked for the government of the Russian Federation, both as legal and financial advisor. So he's familiar with the details of Russia's approach to management of sovereign wealth funds, as we worked together at the very beginning of when we start approaching the way we would manage the funds accumulated in this first stabilization fund. So nearby we have Andrei Rozanov, Managing Director and the head of unit responsible for consultancy to the state organizations in the Permal group. Yes, I don't know how exactly pronounced, but Permal looks fine. Yes, and we have with us Mr. Udamir Das, the head of department at the International Monetary Fund, department responsible for debt management and capital markets. So this is our panel. We can, as far as there's not so many of us, we can choose different ways of discussing. My proposal is to give the floor one by one to our speakers, and after we will ask each other questions, I think, and we hope that our guests would do it the same way. So first, Svetlana, please make your presentations.
Good morning, esteemed colleagues. My presentation was more oriented to the invitees because our guests know the legal issues in the sector, but still I welcome everybody who has come. I will tell you about the history of sovereign funds in Russia. Starting from 2004, the Stabilization Fund was formed. In February 2008, it was broken into Reserve Fund and National Welfare Fund. Just a minute, the presentation is not on. Channel 6. Somebody should switch the pages. Will somebody help me? Svetlana is asking. So starting from 2008, the Reserve Fund and National Wealth Fund were set up. You can see the goals, the objectives for which these funds were set up. The Reserve Fund is to balance off the budget and financing of budgetary expenditures, and the National Wealth Fund is the financial support of the national pension system. The next slide is for the sake of information. Sergei Anatolyevich briefly dwelled on this issue. Now the Ministry of Finance prepared amendments to the budget code, not to control the... Those are just changes for everybody who would like to know the details of the changes taking place in the several...
Yes.
So can everybody hear me? So the next slide. Allocation of sovereign wealth funds. So the budget code identifies the assets to be invested into sovereign funds. Foreign currency debt, obligations of foreign governments, organizations' deposits, so deposits in the banks of Russia and foreign banks. For national wealth funds, there are two assets to be used: equities of legal entities and shares of investment funds. Currently, the budget code envisages the possibility to transfer those funds into trust management to special financial organizations. But now one can say that there's no infrastructure to implement this mechanism. Now the funds are placed by the Ministry of Finance to the Bank of Russia accounts as deposits and deposits in the central bank. So the banking account agreement is signed by the Federal Treasury. So the major principle of managing sovereign funds is the preservation of funds and the stable level of revenues. Speaking about the legal basis of trust management, one can dwell on several aspects. Trust management, the founder is always the Russian Federation. The Ministry of Finance is acting on its behalf, which approves the investment declaration. Proceeds are not the property of the manager. These funds are to be recorded separately. The government of the Russian Federation establishes the parameters of remuneration and expenses for management and approves the reports regarding the fund management. This slide shows the mechanism of state debt management and something we would like to change. That's where you will see our major proposals. Now, the current mechanism is not efficient, the public debt management mechanism. The Ministry of Finance formally is the authority which has the authority to manage sovereign funds assets. But the current system has some deficiencies. One of them is limited infrastructure and human resources capacity of the Ministry of Finance, which is true not only for debt management, but also for sovereign funds management. The agents do not participate in the management of public debt. I mean the central bank and the web. The Bank of Russia provides technical placement of public state securities, the counting and calculations of the sovereign debt. Our objective is to switch to active operations with the public debt. So we want to change the structure of debt. I mean the time, the currency, the interest rate, and the instruments. What is the role of the new institute in the new public debt management structure? Its role is as follows. It will act as a front office to be responsible for interaction with investors and other market participants. And it will be an advisor to the Ministry of Finance on optimizing the structure and reduction the cost of public debt service. Next slide shows the financial institution to be set up. For beginning, it's important to say that we envisage the following fund management structure: the owner, the strategic manager, and operational manager. These are three elements. I will not describe them in detail. It's most important to outline the major issues and discuss those which are controversial. The next issue, which is one of the most important to us, since we are at the stage of approval of this new institute in the government, it's important to establish the form of the organization. Therefore, it's very important to learn about the international practices. Now we discuss two forms, the joint stock company and autonomous non-commercial organization. The Ministry of Finance suggests that the only possible way is the public operation or joint stock company, because non-commercial organizations, as they exist now, are not fit for such type of organization. First of all, this autonomous non-commercial organization should provide services in the sphere of social sphere, education, culture, and financial sphere is too far removed from them. Besides, it has no membership.
Therefore, Russian Federation as a sovereign would not have possibilities to overlook in full extent the activity of such a legal entity. In contrast to the joint stock company, with the Federal Federation has its own obligations. In view of the low level of supervision, there is also autonomous organization, which means that the founders of this organization are equal with the third parties, that they have the same services of this non-commercial structure, which otherwise absolutely unacceptable for us, because we realize that such financial organization is set up for the first time in order for a single manager, which is the Russian Federation. In view of that, we have to agree with the form of commercial organization. We cannot accept this form because we hope that the government will be supportive of the Ministry of Finance. And it's important to note as well that the international community and the financial market also have to understand the form of our new financial institution, its shape, and we understand what the joint stock company is all about, its objective, and you understand we're set up with the state, and you understand that 100% belong to the state, and I do not quite really understand how we can explain to the international community, especially in autonomous and commercial organization. I don't think it's a successful form, and we will try to go ahead with the joint stock company organization structure. Now, to mechanisms of transfer of funds to the International Monetary Fund, we can propose on behalf of the Russian Federation this asset management would be established with the gesture company, and then managers would also have their own transactions, the specialized financial organizations. And there's another way of doing it when the financial entities will be an agent of the Ministry of Finance, and this kind of trust management or asset management will be concluded with the financial organizations on behalf of the Russian Federation, on behalf of the Ministry of Finance. So we propose two mechanisms. Each of them has its pros and cons, but both mechanisms have to meet the requirements that are set before ourselves in terms of setting up the financial agency. In conclusion, I would like to show you one more slide. I would like to sort of outline the topics that, in terms of setting up this agency, we are concerned about and we would like to discuss today. First of all, it's the state functions and profit and also legal forms to the various participants. The very important legal aspect that we have to face today, because today international system and the sovereign funds management is the state function, the public function today. Therefore, we speak today that we need to kind of transfer this public function to the private legal entity, even though it is 100% owned by the Russian Federation. It's still very much an independent commercial organization. Therefore, I believe it is possible. Meantime, it is not a standard situation for the national system. Therefore, this is an issue to be addressed. And another issue is the responsibility of the joint stock company and its employees. So long as we are talking about public finance and responsibility for the allocation and possible unfavorable conditions is equally important. And again, the strategic management, it's the government of the Russian Federation, the Ministry of Finance, and who has to be doing it. Next, I want to thank you very much for your attention to my presentation, and I'd like to give the floor to the next speaker. And within what I have presented to you, if you have any questions, probably we just have all the presentations in one take, kind of, and then we come to the discussion. Thank you very much. You have presented us with an excellent summary of
English. Next speaker would be a friend of mine, Herhard Slav. We discussed with him the same issue as just Svetlana Viktorovna described it, probably 5 years ago. And I remember he was caught by surprise when I asked, please explain what legal form German financial agency is being put in. Well, time passed, many years passed, still the question open. So please, Herhard, give your voice, your view on what is really matter and what is really does not matter. Thank you. Mike. Yeah.
Now, yeah. Unfortunately, I have no slides since I'm retired, and I tried to give you my impression on and to talk a little bit about my experience with the German government agency, and to give you a little bit more background about my professional career. I started in banking. Worked for nearly 15 years as a journalist, financial journalist for the leading German newspaper, financial newspaper. Went back into banking for a couple of years, including 4 years in New York as a head of a branch of the German bank, and started in 2001 to set up the German Finance Agency, and was a managing director until the end of 2007. So this was quite an interesting and fascinating period of time, and from these informations you can get the impression that I know the different interests of different market sides in this business, and on both sides. Since 2008, early 2008, I work as an advisor to a number of German asset management companies. I'm on supervisory boards and direct advisor, and I'm advising some other countries and some major foundations in Germany. When we started to discuss how to set up a Russian agency, Mr. Storchak was very surprised when I told him that the German agency is legally a private company, having only one shareholder, the federal government. The reason why it was set up this way was that the agency should be in a position to hire people from the market and to pay them as the market pays. That means experts who know that business from the other side. I was a member of the German government bond syndicate until about the end of 1999, when this system was finished and transferred into an auction system. And I can tell you, the major partners of this syndicate, of course, the old well-known names like Deutsche Dresdner, and I was the third biggest representing the savings banking industry in Germany. When we went into a meeting with the Bundesbank, who was at that time the fiscal advisor for the government, and the government representatives themselves, we knew where the price for the new bond would have to be before we entered the meeting. And after a certain while, of course, the government got a certain feeling and the Bundesbank got a certain feeling and felt that something should be changed, and they looked into the system, also seeing the upcoming euro and a different competitive environment, being not only the only AAA issuer as it was on the Deutschmark side before, having competitors, AAA competitors before, and then they said, okay, how should we position ourselves in this kind of business? And the result was the setup of the finance agency as a private company. Looking back today, at this time, I think it was the absolute correct decision, because we moved very fast, leaving the ministry far behind. Within the first 3 years, we had 5 department heads in the ministry of the department that was responsible for the controlling of the agency. Mostly different reasons for the changes, but in most cases, inability to follow what was going on in this kind of business. We stopped talking to broader parts of the banking group, not inviting all 35 to 40 banks that were allowed to participate in the auctions, but we started to talk to the single banks. And we set up an environment, a competitive environment, and that's one of the most important things one has to learn in this kind of business, and it's very difficult in a political environment to accept that this is a kind of business where you have to manage a balanced give and take between all partners. It cannot be, and it will not work, if you have partners, or if you are a partner that constantly loses or constantly wins. The partner who constantly loses gets out of the game and will quit. So it has to be a common understanding. It has to be developed, a common understanding of what both sides' targets and objectives are. That's very important. And to a certain degree accept. Coming from this point, I cannot comment on the legal environment here in Russia because I don't know the Russian laws, I don't know the political structures in parliament, in ministries, and so on. But you have to have in mind that this is not a government game. It's a business that has to do with open markets. If looking at the finance agency first, you need investors, you need intermediaries who understand what you are doing. You have to be, to a certain degree, transparent. The banks always want to have more transparency, as you normally want to give. But you have to find a solution where you can meet the needs of the markets as well, without giving up certain things. You have to have in mind that the accepted general rules and regulations presented and published by World Bank and IMF and so on, of course, to a certain degree are influenced by banks as well, and mainly by banks and by their interest. And you have to find maybe compromises in between, where you can meet your own targets and objectives and those of your intermediaries and investors. That's a very important point. So you might have to develop your own rules and laws, especially for the market. You will have, for your government paper, your ruble-denominated government paper, it will be your own market, where you can decide what kind of rules you will set up. We have learned, for example, during the first 3-4 years, that we needed new market regulations, new market rules with regard to market manipulation, price manipulation, and so we experienced squeezes and cornering activities, which were until then quite unknown in these markets. And to have an efficient market and to be able to offer an attractive instrument, investment instrument, you have to make sure that the legal environment for the market also is okay and works and offers international standards without allowing, let's say, things like cornering or squeezing. These are developments that are unavoidable, that you have to set up, and I think it's very important to have the right people on board. I can tell you, after half a year, when we set up the agency, when we really starting to work on our first strategy papers, we had learned that we are talking in 2 different languages with the ministry. So we set up an alphabet in real writing. Said, okay, A means that, B means that, C means that. So when we was talking about a cheap issue, the government Ministry of Finance said it's expensive. So we had different languages. We had to learn what we mean when we're talking about the same topic. And I can imagine that you had similar experiences. And that's the reason why you have to have a certain understanding that's not normal, let's say, in a kind of institution like a ministry. And looking back today, I would say in Germany we made 2 mistakes in the structure of the agency. The one is the reporting to a department in the ministry as a controlling department. Because this department had been responsible before for this kind of jobs, at least for a certain selection of jobs. So there was a lot of jealousy in there. They had lost their jobs. They were shifted to the controlling side. And they didn't like that there's some people in Frankfurt who were making more money, knew obviously better in many aspects. This didn't work. So it would have been much better to set up or to have a kind of board in there with the control under the ministry, for example, but having experts, market experts in there, I would have said, from the board of KfW, from the board of the central bank, and some neutral advisor. That would have made things much easier in the beginning, and we would have had the chance to go ahead much faster than we had the chance to do. And before I left the agency, before I retired, the ministry decided also to add the retail business to to the agency, which had been separated before in a different institution. The result of all of this is, when we started, we were 5 people. When we were operative, we were 25 people, and this was the core of the agency. I wouldn't have needed more, but they forced us to set up a structure like a bank, so we added, multiply by 3, so we came to 75, 100, and when I left, we were 325. So the agency is now moving more and more towards a public institution. And this hinders in many aspects and takes away flexibility. So from my point of view, a board in between would have been much better. Some words to the Sovereign Wealth Fund. Also very difficult in a political way. I understand this. We had a meeting, Mr. Stoczak, a couple of years ago, where also our Norwegian friends had been present and made a presentation. And one of the mostly discussed questions was how do you make sure that politicians cannot grab on that money that's put in there. That's a very difficult question that you have to solve in your country. I don't know these structures here in this country. And of course, the political framework has to be set by a government or parliament or whatever you decide. There are different solutions. Of course, you know the Santiago principles, which are very important. Very important for the success, and also finally for the political success, is the transparency of the activities of this fund. You can set limits. Of course, you should not announce what you're going to do in advance. That's clear. But you should explain what you have done in the past and why you have done it. And this might even include not mismanagement, but mistakes you have made. This is very important to learn. I know this from many meetings from big investors. It's accepted to admit that you have made a wrong decision due to a wrong market development or market development that you didn't see. That's better than not to talk about it, because somebody will find out, somebody will leak, and this is horrible for the presentation of such an institution publicly. The Norwegian funds have no problem in discussing publicly why they still stick to a certain part of active management of their portfolio, despite the fact that they have lost lots of money and tons of money in 2008. But they will stick, and they have good arguments for that, to leave certain portions, I think it's 20 or 25% or 15 to 20%, that they have actively managed outside the fund. I think this puts this fund in a very specific position, and that this shows what kind of transparency is necessary on the side of Sovereign Wealth Fund. It's much better to be open than to try to hide things which went wrong. And if you are in capital markets, everybody who has been in capital markets, and I've been for 40 years, knows that you don't make always the correct decisions. And that's very necessary to accept and to know. And also politicians have to accept this and to know. We had a parliamentary controlling committee in Germany as well. We had to report once a quarter. And we have always been asked, what's the interest rate view of the agency? And I always said, we have no view. We are not speculating. We are working on the basis of forward rates. And that's what the market is expecting. That's the only basis where we can calculate a potential risk, where you have no other numbers. You cannot speculate. in the time before the agency, I know from my first partner, who was the head of the funding department in the ministry, he said, okay, we were sitting when we were planning the budget for the next year, we were sitting together with my colleague, and then we said, okay, economy might go better. Maybe we have an interest rate increase of about 3/4 to 1 percentage point. So let's put this into the numbers. After 12 months, nobody knew what they had discussed 12 months before. So that's very basic. Control, very important to know what you have decided at what point of time, on what basis, to know what the cash flows of the government are. We have put all numbers that went to the central account of the federal government at the Bundesbank from the first moment on PCs, on computers. So after 2 years, we had a complete statistics. We had a complete view on tax developments, which is the deciding partner. The spending side, you know, that's a big difference. That's a big task of the agency. But the unknown side is the income side, the taxation. Tax income. The spending side, you know, because you have a budget, and you cannot go ahead above the budget. But this has to be in place. It's a very complicated and very burdenful work, but this puts you in a situation where a friend from the Treasury in Washington once said, it was in December, I think 2006, where the OECD asked me to explain our cash flow, our cash management system, and after I stopped, he raised and answered questions. He raised his hand and said, "Okay, I would like to be allowed to enter the 20th century after I've heard how the 21st century looks like." The U.S. Treasury was far behind. They have kept up during the last 3 years, I say, substantially, and this was also due, from my personal point of view, I say this very openly, due to the influence of investment banks, because they didn't want to have a change in the system. And if you look back at the Ministry of Finance in Washington, to let's say to the 80s, 50% of all ministers had been former representatives of finance ministries. So no surprise. But I have seen that they have had many changes over the last 2 or 3 years, personnel-wise and system-wise. So let's stop here.
Thank you, thank you. So I already have a question for you, but as we agreed, we'll put questions afterwards. So let me pass the word to David Sable. Yes, work.
I do have slides. I don't know whether they're capable of being seen.
Yes, they are. They are. Yeah.
Good.
Yeah.
A change of pace. I'm going to talk about local law restrictions on foreign investment. And that is a topic of increasing importance to sovereign wealth funds as they move from overwhelming investments in debt instruments to the acquisition of control of operating and holding companies. I'm going to focus principally on the United States, not just because I'm a U.S. lawyer, but because the United States remains by far the deepest and most important of the capital markets. And I'm also going to focus on local law, that is U.S. law restrictions that are linked to national security concerns. That sounds like it might be a very narrow topic, but as a result of changes that appear on the front pages of the newspapers daily, and in particular 9/11 in the United States, the definition of national security for U.S. purposes is now extraordinarily broad. It includes virtually all telecommunications companies. The acquisition of a TV network or a radio license would be treated as a matter of national security. It includes the acquisition of energy assets. For example, nuclear power plants and non-nuclear power plants. It includes, famously, the acquisition of critical infrastructure. Ports and bridges, especially on the coasts, are now treated as national security. It includes transportation. The acquisition of any of the national airlines in the United States would be treated as a matter of national security. And the one perhaps most interesting for this group and most surprising is that in recent years the acquisitions of a significant equity interest in financial institutions, likewise treated as a matter of national security, or may be treated as a matter of national security. I've put on the slides some recent examples. Dubai Ports World, a United Emirates company, attempted acquisition of a UK company that controlled interests in 6 ports in the United States. Permission denied, and ultimately the acquisition went ahead on the basis that the U.S. ports portion of the company would be divested. So too, Middle Eastern and Asian sovereign wealth fund investments following 2008 in financial institutions, Citigroup, UBS, Merrill Lynch, Morgan Stanley, and Barclays Bank, all attracted national security attention. That is not to say that they were denied approval to acquire those interests in those companies, but only that they were reviewed as if they raised national security concerns. One other preliminary point, UBS and Barclays are obviously not American institutions, but they have American operations, and the U.S. law that I'm going to talk about applies as well to the acquisition of a foreign company, that is a non-U.S. company, that has substantial interests in the United States. Primary focus today is going to be on the national security review carried out by the Committee on Foreign Investment in the United States. That's known by its nickname CFIUS. The slides include materials on U.S. sector-specific limitations, aviation, communications, nuclear energy, and classified government contracts. I'm not going to talk about those today, but they're included in the materials. And I would add that there are similar but not quite as comprehensive restrictions in the laws of most Western European countries. CFIUS was created pursuant to a U.S. statute called the Exxon Florio Amendment, and it is administered in practice by the U.S. Treasury Department, which is itself an interesting take on the United States approach to national security. The U.S. Treasury is assisted by other agencies of the United States government. So, for example, if there were a proposed acquisition of a nuclear power plant, then those agencies with responsibility for nuclear energy would also be involved in the review process. CFIUS's jurisdiction is extremely broad, as this slide indicates. CFIUS has authority to review any covered transaction. That's a defined term, and a covered transaction includes any transaction buyer with any foreign person which could, not will or is likely to, which could result in the control of a U.S. business by a foreign person. So virtually any transaction of a U.S. operation by a foreign person involving a transfer of control is captured, at least in principle, by this law. In the case of sovereign wealth funds, by definition, in the statute and implementing regulations, any acquisition by a sovereign wealth fund, that is a wealth fund controlled by a foreign government, will be subject to CFIUS review. Two things to emphasize here. First, that foreign person is defined very, very broadly. Companies organized under the laws other than the law of the United States, foreign nationals, foreign agencies and instrumentalities, and obviously sovereign wealth funds all constitute foreign persons for these purposes. Second point to note, control. For most regulatory statutes in most jurisdictions, control means the ability to, the ownership of 50% or typically one more than 50% of the shares of the equity interest in a company, or the ability by contract or otherwise to designate a majority of the board of directors or other managing instrumentality. In the case of CFIUS, the control is not defined nearly so narrowly. It means more like significant ability to influence the affairs of the company to be acquired, and it can include not just affirmative influence, but negative influence, by which I mean the ability to veto a transaction. That too can constitute control for these purposes. CFIUS review, let me just go back a step. If you fall within the definition of a covered transaction, that is the acquisition by a foreign person of control of a U.S. operation, then the transaction is theoretically subject to CFIUS review if it involves a matter of national security. Compliance with CFIUS, the submission of a request for approval, is technically voluntary. But as with the case with most governments, and certainly true with respect to the United States government, review here is voluntary only because the United States government reserves all of its rights to interfere with a transaction, to order its divestiture, to impose restrictions on the operations of the company, both before and after closing. So all of the risk of noncompliance, regardless of where, what stage of the process the company is in, lies with a foreign acquirer, irrespective of whether they have filed an application. I've listed 3 advantages and 3 disadvantages of voluntarily complying with the U.S. scheme. 3 sounds like a nice number on each side, as if the considerations for and against voluntary compliance are neatly balanced. In fact, it is overwhelmingly in the interest of foreign acquirers, in the case of any doubt, to comply with the CFIUS review process. The advantages, briefly put, are the ability to reduce political criticism, control the timing of the transaction, and eliminate post-closing divestiture. The disadvantages, which are 3 in number, much less important, are that it could attract attention to a transaction that might otherwise slip through, unlikely in the case of anything having significant national security implications. The notification is burdensome, but decidedly less burdensome than having to divest the company following completion, and it could lead to pressure from the U.S. agencies to alter the transaction. This is a reference to so-called mitigation agreements, which are very typical. Almost all companies that are seriously engaged in national security concerns ultimately enter into mitigation agreements with the government whereby they agree to limit the national security consequences of the acquisition. I'm going to skip over the procedural aspects of the compliance with CFIUS review. They're in the materials if anybody is interested. I want to mention just briefly how broadly defined national security is. It includes homeland security, and it includes critical infrastructure. The terms are both broad and flexible, and as I indicated at the head of my comments, can today cover virtually any transaction involving a U.S. company and a foreign acquirer. CFIUS review is based on a matrix between, on the one axis is vulnerability, meaning how sensitive is the sector. And I've listed on this slide some of the really critical sectors, including obviously government contractors, weapons and munitions manufacturing, but also aerospace, telecommunications, energy, transportations, financial institutions, advanced technology. Virtually any the acquisition of virtually any computer, hardware or software company, probably Facebook accepted, could involve ultimately a CFIUS review. So on one side of the matrix is the vulnerability. That's the sensitivity of the acquisition. On the other side is the threat, the likelihood that the foreign person would constitute a threat to United States security, and that's a question of which foreign government controls where the company is located. SWIFTs are by SWF, sovereign wealth funds, are by definition government controlled, and by definition attract CFIUS review. The CFIUS typically considers all of the relevant facts and circumstances. That's the way they say it, and by that they mean there are no hard and fast rules to determine whether you have complied. They reserve the right to change the rules as circumstances, in their view, demand. 4 factors that are taken into account: foreign government's record of national security cooperation with the United States. An acquisition by an English company will be much better received than an acquisition by a Chinese company. The extent to which the sovereign wealth funds' investment policies require investments to be made solely on commercial grounds. There are some countries, China's again an example, where there are questions about whether the government controls the sovereign wealth fund's policies and uses that as an instrumentality of state practice. Earlier speaker mentioned as well the Santiago principles, and they too are taken into account. The last comment I want to make deals with risk mitigation strategies, how to comply, what best practice in complying with CFIUS. Obviously, avoiding sensitive sectors, avoid CFIUS review. The problem is the number of sensitive sectors are becoming fewer and fewer as the definition of national security expands. Second, limit control. Passive investments of less than 10% don't attract CFIUS review. Anything beyond 10% is potentially subject to review. And third, build support. National security is very much a question, in part, of real national security, and second, of political concerns, and a consensus can be built to support an acquisition that might otherwise be challenged.
Thank you, David. Your presentations proves what I've said at the beginning, that we're going to discuss very delicate, very fine issue, and the facts and details you presented to us prove this. It's, it's in between policy, finance, economy, diplomacy, as far as we're supposed to comply with different internal laws, practices, and while managing, theoretically obvious things, money flows, we're supposed to be under control of other states' government bodies. So all these need to be taken into account. So our next speaker is Andrei Rozanov, who will give his view on what is being discussed now. Yeah.
Thank you very much, Deputy Minister, and thank you, ladies and gentlemen, for the opportunity to share with you some thoughts on sovereign wealth funds and the legal aspects of that. In the interest of full disclosure, this is a legal forum, I'm not a lawyer. I'm not really a legal specialist. But I do work with sovereign wealth funds. I have done so for the last 8 years. And I thought it would be hopefully useful to share with you some thoughts and observations that came out of that experience. Now, the way I decided to formulate my speech is to put forward to you 3 specific questions. So the first question is, when you look at sovereign wealth funds, what legal format would allow a sovereign wealth fund to achieve its objectives in the most optimal and efficient manner? And I think this question is very relevant to what has been going on in Russia in the last few years as the government is looking into the possibility of setting up a so-called financial agency to manage these funds. The second question is, very much coming out of what we discussed so far, what kind of legal mechanisms and what kind of legal protections exist today for sovereign wealth fund investors in recipient countries. If they go out and invest in America, in Europe, in certain Asian countries, how can they be sure that the investments that they make have the reasonable level of legal protection? And what assurances do they have? And we'll talk a little bit about that. Third question really is very basic. If you are a lawyer, I mean, a lot of people participating in this forum are lawyers. So if you're a lawyer, what role do you have if you work for a sovereign wealth fund? I mean, how important and specifically what is going to be your role if you are a lawyer in a sovereign wealth fund? So these are really the 3 questions that I would suggest may be interesting to talk about. So on the first one, the legal format or the legal form that a sovereign wealth fund or a company manager, a government entity managing the sovereign wealth fund takes. The interesting thing is, if you look around the world today, there is no hard and fast rule. There's no one-size-fits-all solution. Different countries have different approaches. So you look at Russia, you look at Hong Kong, you look at Saudi Arabia, for example, and typically the sovereign wealth fund is managed very much as part and parcel of the foreign exchange reserves on the balance sheet of the central bank. There is no separate legal entity, and it really is a certain central bank-centered approach, if you will. Then you look at something somewhere like Norway. There's a separate fund, but again, it is managed by the central bank. The central bank, granted, has set up a separate entity within the central bank called Norges Bank Investment Management, but it does not really have a separate legal personality. It's not a legal entity. So again, the central bank is heavily involved in managing the assets. And then you look at countries like Kuwait, you look at Abu Dhabi, Singapore, Korea, South Korea, China. That's where not only is there a separate fund, but there's a separate legal entity actually managing it, like the equivalence of the agency that I suppose the Russian authorities are talking about. So really, there is no hard and fast rule in terms of what is the best and optimal solution. It is dictated very much by the conditions and the specific circumstances of each individual country, the level of economic development, the level political tradition that exists in that country. It could be determined by the sources of the revenues that are being accumulated, whether it comes from oil exports, whether it's just excess central bank reserves. And to a certain degree, it also depends on the level of sophistication and understanding of finance by just the citizens, the people in the country, how advanced and how sophisticated they are to support a sovereign wealth fund operation. Now, I would like to use one specific example. I think it's just a very telling case study of why it's important to have a legal format for a sovereign wealth fund that is flexible, that allows the fund to operate in a way that is very different from the rest of the government bureaucracy. I recall a specific episode when one of the head of one of the oldest and largest sovereign wealth funds, about 10 to 15 years ago, was asked this specific question. at that point in time, I think one of the portfolio managers at that fund got a bonus, an annual bonus of $5 million. And that became a bit of an issue. So somebody asked the head of the fund, how can you really explain that a portfolio manager who's essentially a civil servant got a bonus of $5 million? That just doesn't sound right. And what I liked about that, the response, it was disarmingly simple. So the head of that sovereign fund looked at the person and said, you know what, let me illustrate this by a very simple example. He said, let's assume that the difference between a good portfolio manager and a really good, really talented portfolio manager is, conservatively speaking, just 1% difference in their return on the portfolio, 1% difference. So if our reserves, he said, are, let's say, $100 billion, in that context, the better portfolio manager brings into the budget and for the people an extra $1 billion. He said, I don't know about you, but to me, paying somebody $5 billion to get the extra billion for the budget sounds like a good deal. Now, from my experience of working with sovereign wealth funds, I'll be honest with you, I think I can count on the fingers of one hand. I can count on the fingers of one hand the sovereign wealth funds that would probably operate in those categories, that would have the freedom and the flexibility to do precisely that. So this is not a typical example. This is an exception. But the reason the others don't do it, or the reason the others are not as capable of accommodating this, is not because they do not understand this. It's not because they do not share the logic. It's because they have legal, mostly legal, but also certain other constraints on how they operate. Because at the end of the day, most people in most sovereign wealth funds will act or feel like civil servants, like government employees. And I think the point I'm trying to make is that I think when people think about setting up sovereign wealth management agencies, or when they think about what is important in terms of the rules and principles that we need to reflect in the law, I think it's extremely important to try and give the entity managing sovereign wealth funds as much flexibility as possible. And also to keep in mind that when, as a government, you're trying to attract people to manage assets, those people, they're not competing with civil servants in the statistics department of the central bank, or, with all due respect, with different departments of Ministry of Finance. The people you want to attract are actually competing with asset management firms and private sector firms in the private sector industry. So the levels of compensation, but also the levels of responsibility that you need to enforce on these people, and the levels of accountability, in my humble judgment, need to be benchmarked against the private sector, not the public sector. So that's one of the points I wanted to make. The second question, okay, the levels of and the legal norms of protection. If you're a sovereign wealth fund, you go out and you invest in America. CFIUS review being a classic case study. If I understand correctly, there is no today. Please correct me if I'm wrong. But today, on a global level, there's really not an equivalent of what we have with WTO. There is no uniform set of rules and legal norms that everybody subscribes to in terms of cross-border investment in the same way that people subscribe to WTO rules, right? So what this means is, first of all, that there are at least two important sets of rules. One is the OECD principles that have been laid out for recipient countries in terms of how they should treat foreign investment, government investment. There was a breakthrough in the last few years with the so-called Santiago principles that Uday here, I'm sure, will mention in his remarks. But important as they are, those tend to be voluntary principles, or principles that countries are supposed to ascribe to, but at the end of the day, it falls to the national jurisdiction and to the national legal norms to determine how a foreign investor, or sovereign foreign investor more importantly, is treated when they come and invest in the local country. I would argue that it's probably important for the sovereign wealth fund community both to work on the international multilateral level to develop further the Santiago Principle or the OECD rules, and to hold, by the way, recipient countries more strictly to account on their compliance with the OECD rules. I think there's been a bit too much focus on the Santiago Principles and whether sovereign wealth funds comply with that, and that's fine. That it should be like that. But at the same time, I think we need to be more balanced in this and make sure that the recipient countries do feel the need to comply and perhaps even develop further the OECD rules. But also on a bilateral level, I mean, things like bilateral investment treaties that have been very popular, from what I understand, the last several years, where you can actually incorporate specifically and explicitly legal protections, should you desire, for sovereign wealth investments, and also have spelled out the proper responsibilities that sovereign wealth funds would have investing in each country that is subject to that bilateral treaty. And finally, just on the final note, in terms of lawyers going to work for sovereign wealth funds, what is the role of lawyers in a sovereign wealth fund? Just as in my previous example with the fund manager who got the $5 million bonus, I think it's extremely important to think about lawyers and legal expertise in a sovereign wealth fund as being part of as not just being part of a staffing. It's not a question of staffing. Okay, you hire a few lawyers and they do the job for you. I think it's a systemic and critical part of the whole construction, because a legal contract that has flaws in it, or if can lead to losses, $1 million, $100 million losses, in the same way that a flawed investment strategy can lead to losses. So I think it's extremely important to realize that when you hire legal expertise, when you hire lawyers to work in the sovereign wealth fund, you are hiring an extremely important part of the whole construct that will look after the fund and hopefully help protect the material aspect of how that fund is managed. So on that note, I'll just conclude by saying that apparently it's an English expression. I live in London. Every Russian, I think, knows that expression. I've never heard it in England, so I don't know if it's an English expression, but I love it so much. When they say that we're not rich enough to buy cheap things, right? But by the same token, I think the key principle here must be sovereign wealth funds are not rich enough to hire cheap expertise or to hire cheap lawyers. So on that note, let me pass it on to the next speaker.
Thank you very much. Thank you. Just a very short comment. In principle, I agree with you that in the international finances, there's no regulations. It is what we have in the international trade. But the Financial Stability Board, which is now gaining ground, becoming more and more influence, can be at some stage the same institute as WTO for international trade. And it's a pleasure for me to pass the word to Udamir Das, IMF Director of Debt Management Department, and all other responsibilities, many other responsibilities. Thank you.
Thank you, Minister. And I suppose coming right at the end, I can have the last word on this. I also have slides which I'm not putting up, but I'll be happy to share with all of you. Also, I believe that after hearing all the excellent interventions, probably my slides are, if I were to do it again, I would do it differently. So just as well that I'm not putting them up. I want to sort of step back from what my colleagues on the panel have been saying. Very often, I think we lose sight of the question why and what for are we really talking about this whole agenda? I think we are getting too much caught in the trivia into the little things. And I really would like for a moment for all of us to step back and ask, what are we really talking about? Is it about setting up a system to borrow better, borrow at a lower cost? Is it about managing assets in a more prudent manner to optimize and to get more returns? If it is just to borrow better, I think it's very easy. There are lots of good models in the world that countries do follow, and we can emulate them, whether it's a German model or it's a Swedish model. And if it's a question of managing oil revenues, then I think Russia itself has set a very good standard. We at the IMF actually tell a lot of countries to actually see how a new entrant in this field has gone about making some very tough choices and is continuing to be challenged by the trade-offs, both from a policy point of view and from an operational point of view. But where I come out is, I think this panel's job is less in terms of how to borrow better, how to manage assets better, but it's more on how to manage the assets and liabilities in a more composite manner. It's to lower the cost of carry that is coming on the balance sheet of the state, which then has to be either fiscalized in the form of tax or for cutting some item here or there. It is about reducing financial risks. It is about deepening the local capital markets onshore in Russia. And it's about how do you integrate both the asset side and the liability side in the overall macro budget framework. And this, for me, is the bigger challenge rather than to look at one part of the balance sheet, i.e. the debt side, or to look at reserves or foreign assets on the asset side. In a sense, government is a monopoly. It's a monopolist. It is the only one which issues debt. Sovereign securities are issued only by the government. Similarly, government is the sole monopolist in terms of being the custodian in charge of its financial assets, whether it's reserves or, in the case of, say, a country like Russia, the natural resource wealth is very much a property of the state. It's a different point in managing it, whether you outsource it to the private sector or not. But fundamentally, both the debt side and the asset side, or the liability side and the asset side, the state is a monopoly. And as an economist, I can tell you that that's something that we always say, that monopolies are bad, because that's where disincentives set in, and that's where rent-seeking comes in, and that's where diffusion of accountability comes in, or governance comes in. And many have argued that because the state is a monopolist, very often when you go around finding efficient solutions for the state, there is often a problem. There is internal politics. There is internal interagency turf problems. So here is a contradiction. The state asks banks to have a good balance sheet, keep capital, be prudently sound, has oversight, but when the state itself is to manage assets and liabilities, then you find that governance structure doesn't quite work for the state. And we have a problem. This is not just here, but it's a global problem. Each episode of financial crisis, you go back to 80s, 90s, and the crisis that's going on right now, that is the heart of the problem. Our analysis shows that the response is in many ways. Either governments then overborrow because there's a crisis, or governments tend to overborrow at a higher cost, or they acquire financial assets with a huge carry, and that carry then becomes a problem which either the central bank balance sheet has to carry or the fiscal or the budget has to carry. So there is it becomes extremely complex. Good news from our side is, and I have about 6 of 5 actually technical teams in the field right now, in smaller countries, that's the good thing. These are all natural resource wealth countries who are actually trying to ask exactly the question of how do we manage our assets, because these are countries who are coming more from the asset side of the balance sheet rather than the liability side. And that's not a non-trivial thing for you to think conceptually, because state's balance sheet is the biggest. The liability side is always big. either above the line or below the line, because state also has a lot of contingent liabilities for which the state is responsible. It is the asset side which is relatively small, and that's where the big tension comes in. So many times when we sit at the IMF and try to create a T diagram, sort of a conceptualized balance sheet, the liability side is always huge and big and pretty well lined up. The asset side is relatively small, and then I say, well, how do we add another component to really line it up? And I think that's where the governance, credibility, goodwill, and so many other factors come in that line up the ALM approach for a balance sheet of the government. And for credibility, I think the legal framework, the institutional framework, how you communicate the approach that the state is taking becomes extremely important. Another point I wish to make is that for me personally, and this is not the official view of Washington in any way, I think what Russia is trying to do through the RFA is extremely progressive. And I do hope that, I know that you are challenged by many things, but this discussion must continue, and Russia must continue to keep what I think is the next generation of where state public financial management ought to go. I believe that in one of the books that I edited, the piece that Peter probably wrote, it's called the third generation reform towards which Russia is moving. I quote it quite a lot in my global dialogue because we have seen the evolution. There was a time when countries were basically relying on concessional, bilateral sources of financing, or even misusing central bank balance sheet to print money, inflate debt, and so on. That was the first generation. The second generation was when we moved out of it and we moved more towards capital market or market-based forms of managing your liabilities and assets. But where we are moving now, and this is where I think the world is getting challenged, is to move towards a more integrated, composite ALM approach, or what I call the SALM approach, the Sovereign Asset Liability Management approach. I am therefore from the school that governments must move regardless of all institutional and legal impediments. I think the lawyers have to come up and find good solutions for it, which are purely domestic, will be across different agencies, whose assets this is, who has the right to borrow, who can contract a guarantee. I think there are a number of issues, and they're spread and fragmented across so many different government agencies. But I think that's where we have to come up with a good, practical, simplified way of approaching it. I don't believe that we can immediately start managing everything from one point in a system. That might be difficult for practical reasons, but analytically and from a policymaker's point of view, I can definitely see that there is a very good case that when a country decides to borrow, it doesn't just look at the price at which it raises debt or borrowing, but actually is able to ask the question that what will be the effect of this borrowing on the composition, on the duration, and on the maturity structure of entire assets and liabilities. Do I really need to borrow 10 years? Maybe I need to borrow 20 years money, or maybe I need to borrow 3-year money. I think those are things that come not just because there's a market and I can borrow, but that's sort of lining it better with your policy imperatives and with the asset side of the balance sheet. Another idea that we are floating right now is that why don't governments institute the role and the function of a chief risk officer? I mean, we have budget managers, we have fiscal managers, we have reserve managers, we have debt managers. I'm bringing in the concept, have a chief risk officer. And I think the chief risk officer in a government's job will be exactly to see that at any point of time, the financial risks to a government's balance sheet, to a sovereign's balance sheet, are properly aligned, and those risks are contained and monitored. This again comes from our experience of financial crisis, that when crisis comes, we somehow forget that there is a financial risk that is bestowing on the society and on the taxpayer. So think about it. I go back to the corporate sector. I think good corporates 16 or 18 years back onwards decided that they must not only have a chief operating officer or a chief executive officer, but they must have a risk officer whose job it is to actually see that the risk of the balance sheet is always kept controlled and managed. I think in that context, My other point is that don't manage it from one point, but definitely move towards creating, through the CRO, an analytical or a surveillance framework that allows the state, the government, to be able to be more accountable and responsible for monitoring the composition, the duration, and the maturity mismatches of the assets and liabilities. So let me sort of close here with some thoughts. They may not cover legal issues per se, but the reason I chose not to go that route, it's there in my presentation, is because I think we need to pull back and go a little conceptual and see what is it that we are really talking about here. So I hope that this discussion on SALM issues, Russia will continue to move towards the third generation. The reason is because we have staked out a lot by telling other countries who are asking who else is thinking about it. I'm saying actually Russia is beginning to think about it. And it is going through the tough times. There are no easy solutions. So let me just sort of pause there. Thank you.
Well, thank you very much. Dear colleagues, we had a chance to listen to all presentations. Now we have at least 20 minutes for questions, but I think those who wish ask questions after this experience expiring, 20 minutes can do it. I'm simply speaking about myself as I have some constraints. So, as I promised, my first question would, I'll mix that up in terms of questions, and my first question is to Herod, who said during his presentations that at the beginning they made two mistakes. He explained one, meaning reporting to department at the Ministry of Finance. And what about the second one? I failed to keep it, or you didn't mention. Please.
The second one was the add-on of the retail business, which, from my point of view, absolutely didn't make sense, because the agency was set up with a major objective to do everything that will reduce borrowing costs for the federal government. And it has never been proven that the retail business, compared to the institutional business, was profitable, because you needed especially much more personnel. So when this was discussed first, they had 425 people. So we took over 225. Now you will see in the German press the next couple of weeks or months that they are again thinking about stopping retail business in the Ministry of Finance. But it was a big burden, because they could not solve important questions like the personnel questions, because people in the retail institution were civil servants and public employees. Of course, you cannot transfer a civil servant into a private employee. So you had two bodies in one agency, and they constantly met in court and had problems.
I see.
And that's what they are going, I think, to repair very shortly, maybe during this year already.
Okay. Thank you very much. So, please, Piotr Kazakevich, Deputy Director from the Minister of Finance.
Mr. Shleif, just a small question. What do you mean by retail business? Could you explain it?
That are the funding activities via private investors, which had been in place for, let's say, 30, 40 years, but never counted for more than 2% of the overall funding activities. So 98% came from the institutional side, and 2% at maximum. Right now it's below, at these low interest rate levels, below 1%. And then you have 225 people to employ and to pay for the 2%. And the rest I would really have needed would be 25 people, for example, to handle the institutional business. But it's a political decision, finally, and we had to accept this when they decided in 2006. That was the reason.
So the state is not the only client for the agency. Individuals are also...
Yes, and of course mostly institutional. We have about 30. Right now we have about 35 international banks that are allowed to participate in the auctions. When they started the system, they had between 60 and 70 institutions. They have no primary dealers. I think it's the only issuer of that size that has no primary dealers, for good reasons, because they are not paying anything for that, what they are doing there.
Thank you.
Any other questions, please? Yeah.
Спасибо, уважаемые коллеги. У меня, может быть, не вопросы, а
Dear colleagues, it's not a question, but some consideration to Svetlana's presentation and about Andrei's presentation. St. Petersburg State University, what you've been saying is absolutely clear to me, because I read the norms of the budget code and I have some ideas about it. It's a very delicate issue about setting up a structure for sovereign debt management. There are some restrictions from the Ministry of Finance, it is clear. What you've been saying about an agency, not about a power authority. We know the property management agency, but you're speaking about agency as a legal form. It's not a state power authority. And it requires some financial transactions at financial markets. But, esteemed colleagues, we should remember that we want to introduce some state public funds into circulation. So the Fund of National Well-being is the guarantee of financial stability of pension system and social insurance. It implies constitutional rights of people, their financial well-being. So one should be most conservative. Good conservatism should be applied. The question is how to select. You suggest a public company. Tomorrow there will be a conference on changing the concept of our civil legislation. And those designers of the civil code, the concept of an open public company was not designed in Russian legislation for a public entity. And even in the new concept of the civil legislation, the public subject interests are not taken into account. There are a lot of monographs, a lot of work written on this topic, and I think we should not select the civil legal constructions to fit them to the state's interest. If you look at the extra budgetary funds, which are moving towards a special federal law, the draft of which was designed by the Ministry of Social Development. Still, the legislation said that these funds, which are also state funds, and we have legislation about investments, unlike the investments into reserve funds, which is done on the basis of the Ministry of Finance order. So what is the question? What is your question? No, I just wanted to say that we envisage setting up a special organizational and legal form adapted for public purposes. So why can't we set up such a form and adapt it to public finances? Why should we stop at public company or any other entity? If you suggest this organizational and legal form and do not give any guarantees to the State Duma about the control from the accounts chamber of the Russian Federation, then there will be a lot of questions whether it will be passed. Now my questions. You already asked one question, and I think Svetlana is prepared to answer it. My second question, Well, the servicing of state debt, as far as I understand, will be preserved as the expenditure of the public entity, as far as I understand. So the state will continue to be responsible. And the state is behind this structure. Or the public company is not responsible for the debts in order to avoid increasing the sovereign debt. What would you like to get as the final result? Two questions. The first question is why we are not trying to set up for the financial agency a special legal and organizational form. The state of public cooperation was dismissed 2.5 years ago when a political decision was taken.
And we know this discussing the more establishment of a public corporation as regard the legal right. This topic is very close to me professionally. This construction. Meantime, our legal system is not prepared for it. It proves once again a new concept and the changes in the civil code that we want to introduce. And today, we do not. This code does not envisage establishment of any entities of this kind. It's subject to major discussions, and today indeed we have to acknowledge it. The Ministry of Health is trying to set up an organization for extra budgetary funds, and there is a federal law draft to set up public legal entities. Meantime, all the constructions are categorical. We are not happy with such constructions, and the projects of the Ministry of Economic Development, otherwise a state corporation, which they call a legal entity of public law, which does not comply to our requirements, so otherwise the joint stock company, why we call it this way, I do not see any conceptual problem in it, so long as the joint stock company that we observe today, according to the Russian civil code, should not be sort of vested with various public responsibilities. Meantime, we also know that in our legal practices, and when we try to regulate various spheres, we cannot have any later execution. It's impossible. As regards our subject, we have a that is legal and economic aspects are very close together, and you don't see the sort of the line between them that separates them. And if we invent today a new original organizational and legal form that would be outside our contemporary legal system, it is ultimately impossible. Therefore, what we are trying to adapt ourselves to the existing forms, it's correct. Meantime, we are not trying to set up a new form to accommodate the financial agencies. Meantime, it meets our requirements because such a legal entity is comprehensible by the international market, and we very much are guided by the needs of the international market. We cannot be guided by the national system, otherwise we should not be even taking it up. So long we are establishing the forms and change in civil regulation, we have to select distinctive, clear forms. So a joint stock company with 100% participation of the state is a clear form understood by everyone. And responsibility in any legal form, the responsibility is there. It has to be clearly stated. Meantime, would have the power authorities? No, it won't. But how will it be exercised? And it will be an agent, a governmental agent. It will be a commercial organization, and from my perspective, from the colleagues' presentation, we also heard that it has to be a commercial organization because they need to be present at a high-risk market. It needs to be a commercial entity, and 100% participation will only be will guarantee responsibility and measure responsibility, and who will be responsible in criminal sense for the activities of this entity. I don't have any direct answer to this query because it will depend very much on the crime, whatever. If it is a group violation, it's one thing. It could be Ministry of Finance. It could be heads of various digital companies, whatever. So the crimes, it's always you have to speak about the specific crime. It has peculiarities. So basically, I cannot give you all the variants of crimes. It's and the second question that you raised, I think, if I understood correctly what you were trying to ask, you are concerned about the guarantees to the pension system, so long as we are talking about the pension fund. Frankly, I'm concerned with the expenditures of the public entity, the Russian Federation, with regard to the state debt management as today's budgetary code, because this article has not yet been rescinded, but we are not planning to rescind this article. We are going to observe this article. The obligations are there, and with regard to all the expenditures, the public entity is responsible by all the assets the budget has, and your issue is important today. And what we actually want to propose, it does not change the structure of the expenditure obligations, whatever, or the risks which are present today. We are talking about the funds, and today's funds are governed not effectively. They're not effectively managed or governed, and all the developed economies go to show that you can do it effectively. But we say no, but we still are afraid to do it that way. We have so many commitments and obligations, whatever, and we think that it's but I want to apologize to my colleagues, but everybody who was speaking to us, representatives of Germany and the U.S., all of them said that the first thing, they always have sufficiently rigid state supervision over various transactions and whatever, and concomitantly they guarantee transparency of such operations, which the Minister of Finance is not actually doing with regard to the investments, if I am right. And in addition, it's not low-risk operations, minor operations are very much controllable by the Parliament, and I do not see the mechanism when this open just a company. What is the government or management mechanism, kind of guarantees and state supervision or supervision on the part of the Parliament. Let's put it this way, because you need to understand, dear colleagues, that this is a public subject. It's national wealth. That's what we are dealing with, and through a joint company it will not be solved. I think this is what you will hear in the Parliament. Svetlana Victor, before you respond to that, I want to apologize to everybody. I want to part with you. I want to thank all of you very much.
Questions, answers, so on and so forth. I have a plane and I need to leave. So thank you very much. Please enjoy your stay here in St. Petersburg. And I hope that we will go on with discussions, especially when I live in this situation when we have quite tough questions and questions which are to be discussed sooner or later. Thank you very much.
Да нет, я со своей позиции.
No, dear colleagues, if we carry on, we carry on. All the participants are leaving together with Sergei Anatolyevich, but meantime, if you still want to carry on, if you're interested, we are talking about different subjects. I also understand that, from my perspective, today, Dmitry Anatolyevich, it's a political suicide with the Justin company. If you go to the State Duma for him, it would be. If he comes to our chair, I think we can discuss this issue. from my perspective, you have to look for other ways. And Ray was saying that in many countries it's a good and positive approach, and the central bank and so on controllable, and you set up various structures and whatever. The thing is, what kind of agencies the Minister of Finance has to pursue in order to manage and control under the aegis of the central bank. So it will be an adequate variant for the development of events. I think the central bank, in this particular case, it doesn't have any particular interest in the Ministry of Finance, so long as they say we should not do it. We are professionals, and we say that we should not do it for various reasons. It should be done by some other financial institutions to market. And the central bank, in the meantime, the Ministry of Finance, in our construction, is the same thing. It's the same category. They should not be involved in that. And so long as the Ministry of Finance is in charge, it has different functions and tasks to accomplish. We don't qualify the staff and opportunities. And the central bank has the same constraints, and so long as the responsibility and control depends very much on the institution responsible for that, so then we understand what we are doing. Bank, that is a Russian foreign bank, it's like a legal entity. It may have such a possibility, but this bank has a conflict of interests. Now, talking about the pension accumulations, what about them? Investment of who is the depository, who controls the investment of pension funds? Previously, it was Bank, and who is doing it today? The policy is determined by, no, it's an agency. Bank is an agent because the Ministry of Finance makes the, but. So there has to be some managing company, not an agent. You're touching on what I suggest we do. I think what we should do, we should probably close down this discussion. We will give a chance for everybody to speak, but I do not want to expand this discussion because we're going to a different plane. And it's a very important issue that you're touching on. Meantime, as the only representative of the legal community in our presidium, I understand the gravity of the issues that you're raising, and they're very much in the way. Peter wants to. David? Anyway, it's kind of a national community, and I also understand that our principal opponents are the professional community that you represent. And from that stance, we disagree with you conceptually, and this concept has to be changed. The Ministry of Finance, and how do you want to change it? We want to change it as the situation and the legal system permits us to change it. But there is no way to change it because it will be sort of wedging into the reform of still system. But if we invent a new name for the organizational form, the legal form, it is not a name we are talking about. We are talking about the essence. There has to be a combination of authority and commercial interest and the state interest. It will be that way. If the joint stock company is an agent, a governmental agent, it already is a combination. Unfortunately, it's not really so, and I think the judicial entities, they also have a lot of issues when they have to arbitrate such things. It's legal issues or public or whatever. If they have to resolve an argument, they have to understand the relations that you have between various participants or players. So you do it on the basis of the civil code or on the basis of the financial sort of legislation, but as a result, eventually you create a construction which brings it to a blind alley, a cul-de-sac, if you know what I mean. So, okay, in this case, let us try to summarize our discussion as follows. The theory has to assist, to help realize the reform, implement the reform, but not to be in the way. It should be a merit, not the impediment. And the theoretical platform on which we stand today does not permit us to develop. so we have to change. And it is with great pleasure if our colleagues want to comment on what you have heard. I would give the floor to whoever wants to comment anything on that, on our discussion. Probably you can respond to some of these issues. Can you?
In order to calm down this discussion a little bit, because it's not just the Russian discussion. We have similar problems even in Germany, where the pension reserves, for example, for civil servants, by the regional states and by the federal government, just have been started to set up a couple of years ago. And due to the fact that the Bundesbank law forces the central bank to service all regional states and the federal government without cost, has resulted in the fact that all the regional states send their pension fund money to the central bank in order to handle this. The central bank says, no, we have no people, we have no experience, we have no know-how. The former president of the Bundesbank told me this under 4 eyes, and they said, I cannot hire somebody who has this expertise and know-how, but we are forced by law, and the law hasn't been changed yet. So, fortunately enough, all these states, or the vast majority of these funds, have been invested in fixed income instruments. And due to the fact that we have falling interest rates over the last 10 years, there was no accident yet. So no pressure to change the system in Germany. But we will see a change. The first state now, after 1 or 2 years of discussions, has ordered and has given its money now to professional asset managers, of course, having to pay for that, but at very favorable prices. This discussion is also not solved in Germany, and so it's a political phenomenon, of course, because politics has to make decisions.
Yeah, sure.
I think that all your questions and concerns are absolutely legitimate. I'm just giving you a global perspective. The accountability, transparency, disclosure, and performance measurement for that part of the system state that actually is tasked to either raise money or to invest assets is a very, very important issue for which there are well laid out global principles, global standards. And my presumption would be, and I don't know, what's really happening here, but to the extent that Russia will, like all other countries, keep on looking at that architecture, then my presumption is that that framework would help to guide and take away some of the concerns which you are echoing. So I just wanted to mention that please don't look at it purely as a local issue. It's a global issue of how states manage public finances. And there is a very huge discipline there that in terms of data. Take data. I mean, apart from criminality and all that you mentioned, just the accuracy of what they manage and how they manage becomes very important. And they have to be held accountable to it. So as you create formal ways, whether you want to create a legal entity or not, some do, some don't, but to the extent that you try to approach it in a more formal way, organized way, then with that comes a higher standard of disclosure, transparency, and accountability. And that allows you to create the check and balance, which doesn't exist when you simply put all the money into one account, either with the central bank or with a commercial bank. And so I think you should look at it the way that as you go towards institutionalized forms, it will actually allow you, society, to be able to relate better to some performance benchmarks.
Я на самом деле хотел вас поблагодарить за ваши активные, очень такие конкретные вопросы, потому что...
I want to thank you very much for your very great issues, because this audience is great, and the way you approach it is very nice. It's like a lens print. You mentioned conservatism in the management of reserves, and I would like to dwell on this issue as well, because a number of issues, I fully understand that your concerns are legitimate from the point of view of accountability and with organizations which are managing the assets. But the more you get the Ministry of Finance and the Central Bank involved in such issues, the more perils you'll have that such funds would be managed overly conservatively, if you know what I mean. And one of the leaders of the major pension fund in the U.S., he said the level of profitability that we observe in the 40-year bonds of the American government, if I very conservative invest into them, they will give me complete assurance of tomorrow, and this assurance is in the fact that I will not meet the obligation that I have assumed before my pension clients, because it is a guaranteed predictable situation that you can invest those 30-year bonds. And with the level of profitability and the risks present, it is very conservative, reliable. In time, it is the most unreliable and the most high-risk, guaranteed high-risk investment, because you will not raise any revenues on that basis, good or bad. But anyway, these organizations, they operate in such categories as conservatives will dominate, will prevail, and the people, they need to understand the whole logics that we have postulated here, but the central bank simply does not have, probably should not have, as a rule, possibilities to invest funds into the hedge funds and portfolios and direct investments. And this is a task of a different level, but they can hire, minister can hire a company, managing company, and transparency and accountability will be clear, it will be evident, because it will be clearly stated, and I don't see a great concern about that everything will be non-transparent and problematic. In fact, I have been involved in that for 10 years, and I was concerned with the issues of investments, and I can tell you for sure that, based on my experience, that when the medical insurance invested their funds until today, the level of profitability of their investments is completely, it was going down to zero, probably to the red. And or this insurance company had to leave the market with certain, having grabbed some money, or its credit organization it is Russian reality, Russian situation. You have to understand that. And as a result, eventually what you have is that the commercial organizations, they take certain risks, but territorial funds, in time for the second time, was compelled to meet its commitments before various health institutions. As a result, most of the subjects were in a situation where they were compelled to say to the insurance organization that we will not give any reserves to you for investments, for those manipulations with the state funds. We will give you some percentage, whatever, and you can probably only control the quality of medical service that you provide, but otherwise we will only be controlling the situation between the fund and the actual hospital or whatever clinic that is using the funds, and that's all we can do. You need to find a balance, and so many investments and I am not sure about the pension system, but I'm sure about what happens with the medical, with the health care system, because the pension citizens are not expressing their will. But 90% the state companies investing into those securities and bonds, and they eventually go back to it's a source of funding or compensating for sort of budget deficit. It's a kind of circulation of water in nature, if you know what I mean. In Russian reality, if probably in the Russian reality, apart from the global market, all those investment processes lead to additional state losses. So deplorably, I have to state that.
Not that I want to say anything about Russia in particular. Those comments I reserve for the Ministry of Finance. I would offer some more general observation that there is no single solution to this problem. Different countries have come up with different ways of addressing a common problem, which is ultimately, and I may disagree with Gerd on this, ultimately the responsibility must be with the Ministry of Finance. And by that I mean the Ministry of Finance must be the institution that determines how much risk they are prepared to accept in return for the possibility of investment returns. So that seems to me one clear principle, that ultimate responsibility rests with the political authorities for setting the broad parameters of the level of risk that's accepted with state assets. The other principle, which seems to me equally clear, is that sovereign wealth funds have only been successful, or have been most successful, when they've operated on commercial principles. And by that I mean that they compensate employees not as civil servants, but they compensate them as investment managers. I don't think it's the only solution. The only solution was offered by the Norwegians, but they have had a very, very successful run for quite a few years. And as somebody pointed out earlier, in the Norwegian case, there is not a separate legal entity, but as a practical matter, they run their wealth fund on commercial grounds. In other countries, it might be appropriate to separate out the legal structure so that the wealth fund is not an undifferentiated aspect of either the central bank or the Ministry of Finance. That too could be a successful arrangement, and it really depends in part on local political traditions and local legal arrangements. None of these solutions is necessarily successful, and I certainly don't think it the case that it's impossible to imagine a very successful system with adequate state responsibility in which the sovereign wealth fund is separated out and has separate legal personality.
У нас есть еще вопрос, да? Константин, вы...
Do you have any more questions? Director of Department for the State Debt of the Ministry of Finance. Thank you very much. It's only two comments I want to make with regard to the questions that we have heard. I am a director of the particular department, the Ministry of Finance, which is responsible for the management of sovereign funds and the state debt, public debt. It's important from my perspective, and it's necessary to clarify so that you have a clear understanding what we are talking about. The issue is not that the Ministry of Finance is doing something and it suggests that these functions to be given to some other structure. What we are saying is that we are talking about a different problem. The thing is that the necessity from our perspective to pass over to a new level of management of debt and the assets, it has come that agenda long ago, and we have to come to the operations that by definition cannot be carried out by the federal ministry or any other power body. That is, we are not responsible for that. Meantime, we would not want to give it up and to give it to delegate it to somebody else. And the Ministry of Finance needs an instrument or no structure or an agency. It would be only our tool in order to carry out operations that would make it possible for us to manage the obligations and the assets more effectively. We need a professional participant in this market, to play in this market, and an agency, the federal power body or department of the Ministry of Finance, by definition, cannot be that player. So this is the comment that I wanted to make for all of us to understand the essence. And I have two questions to the panel.
Short comments to Mr. Schleif. You have mentioned that when in Germany a financial agency was created, people in Ministry of Finance department were disappointed because they have lost their job. I would like to say that we will not disappointed if we got a special instrument for more effective debt management and asset management. Again, the idea, we are not planning to substitute Ministry of Finance. We will still responsible for policy issues, for strategic issues, but we need modern, professional market vehicle to manage debt and assets in a much more effective way. So we would be happy if. Okay. And one question to Mr. Sable. David, you have explained us about the certain restriction in the United States for the foreign investors' activities. And you have said that the activity of sovereign wealth fund would be in the focus of the CFIUS by definition. Do you mean that practically sovereign fund could face which more broad and more strict restriction than regular foreign investor?
The CFIUS review is in two parts. The first part is a mandatory 30-day review process, and that is followed by the possibility of a 45-day further review. When I say that sovereign wealth funds are by definition more highly regulated under CFIUS, I mean that any sovereign wealth fund filing under CFIUS will prompt a second 45-day investigation, unless, I think it's the Secretary of the Treasury rules otherwise. So it does not mean that sovereign wealth funds will find their transactions being stricken or being restricted or more limited. It means that the review process is more rigorous for sovereign wealth funds than it is for a foreign private company.
Thank you very much to Mr. Das for a new terminology, 4G management. Yeah? like iPhone. Yeah.
Absolutely, absolutely, and you should move in that direction and set up a chief risk officer in Russia.
I would like to clarify one more issue, if possible. I think that with the understanding that the Russian leaders are looking at Norway, it's correct, because Norway is a great example, and they have excellent debt management system and fund management system, and we also have to look at various alternative models from the point of view of the degree to which the fund management is politicized, the degree to which it is integrated into political construction. If you look at Norway, this fund there is 100% under the influence of the Ministry of Finance or under it, and if you imagine that tomorrow democratically another party comes to parliament, and they would this party would put different slogans and different vision of how this fund has to be managed, and then it will certainly change. The fund will change overnight, if you know what I mean. And but against this backdrop, I want to look at Australia and New Zealand, how they manage their funds. Initially, they said that this fund would be transparent, accountable, and it would be very much integrated into the democratic principles and structures. But we will try to do everything possible and take all the measures so that this fund could be taken out of our political context, so that it will become absolutely safe and secure, and it will be sort of immune to any political situations. So today we do this, and tomorrow we do it that way, depending on the political situation or change thereof. And I think because the country is moving in that direction, it has to be open, it has to be transparent. This is the way it has to be, because the corruption element is also always there. However, I would also want to draw your attention of my colleagues to the fact that Norway is one of the variants, but also Australia and New Zealand could also serve as very good examples, and their experience also has to be taken into account. Can I have one more question, please? Basically, it would be very much common to the Constitution of the Russian Federation. That is to relieve, but the chairman of the government can relieve of his duty according to the Constitution, but he cannot sort of relieve of his duty to the chairman of the central bank. But in the investments, suppose you need some funds in order to organize stability, maintain stability to the pension system, and so how do you do that? How do you get funds for this purpose? Thank you for the question. I just wanted to summarize our today's discussion. And so long as you touched on one of the most important issue and painful issue in the legal sphere, when you speak about setting up a financial entity, it would be very much an answer to the query that you have raised. But the reason why I'm raising this issue is in the system of medical insurance, we're waiting for the end of the depository agreement so that we could pay for the bills of various hospitals, whatever, because we don't have money to pay wages and salaries to the medics, and it would be also a good summation of what we have discussed. We are talking about sovereign funds and their facilities and their assets, and the necessity to set up this fund from the very start. We had a great discussion about that, and there was a lot of opposition. And the Ministry of Finance still managed to persuade the other parties that this fund was necessary, and it had to go through various structural changes. Otherwise, we are talking about the guarantee funds, the funds that are only governed or managed. They do not serve any current activities by the state. It is very important to understand it's a conceptual issue, conceptual aspect. We should never have a situation when they would be urgently required, urgently needed, because this is a vehicle for investment. And from my perspective, it's very important. The Ministry of Finance has built a system correctly of its interaction with the other departments. So the legal department could really influence the economic policy. It would be a utopia. It's out of the question that we have to quit working and sit in our hands. But the mission of our lawyers and my task very much would be in terms of the financial agency is to foresee all possible risks and to help create or develop the adequate legal constructions. But I also have to base myself on the principles and the rules of economic principles, because we're talking first and foremost about the economic institutions, and we're trying to change places with these two institutions. We are saying that we understand your economic principles and laws and whatever. It's quite clear to us, but we have insurmountable problems. And first of all, have to change the legal system and to adapt it, and then only can you come over to the economic issues. But I think that we have first of all to accept the economic institutions that have established themselves, have proven their validity in other countries, with all the problems and contradictions and whatever, with all the risks, and to adapt our legal system so that they would be most efficient. The economic system would be most efficient. So the funds, they do not exist today in isolation, because they very much parts of the budget, but they are separate from the budget. For you to understand, so that you should not be worried about the pension depositories. The federal fund is supposed to provide for that, but our pension system is very much in a deficit. Only we manage it with the current revenues in the budget. So the risks, it's very good that you can handle current situation, but the generation, we should talk about today's generation, because generation which has not been taking part in the pension system, it will have to go. Now, let's not discuss the pension system, but inter-budgetary transfers in order to sort of depreciate the anyway, it's a good situation. It's a very good economic situation. It's favorable. Suppose it is not favorable anymore. No, it's not favorable. It's not really favorable. I wouldn't call it that way. Okay. We have to clearly understand that the current budgetary activity under no circumstances should be directly correspondent with sovereign funds. This is a budgetary facility. It's When we speak about the financial agency, we only speak about the FNB because the reserve fund. It's a question of the issue. We are not talking about reserve fund today. We are talking about the assets available with the FNB and the state debt or public debt management. So, colleagues, I really want to hope that. Any more questions? Okay, go ahead.
From China. I'm a lawyer, and eventually the time already passed 30 minutes of the meeting, but I just want to say very short words. First of all, as I know, the China already become the biggest holder of the American government bond, but the American government is really restrict the Chinese company to invest in the United States. I'm not sure why there is so big gap, between the financial investment and the company investment. But today we have no time to criticize the American doing, but I'm just mentioning that. Another one is for the Russia. As about 2 weeks ago, the Vice Prime Minister Li come to Russia and visit many places and meet President Putin and Prime Minister Medvedev. And as he said, the China become the biggest trade partner of the Russia. And also, right now, many Chinese companies are investing in Russia. I hope, I think as a Chinese company hope, and the Chinese government hope too, the Russia, the government and the Russia, the policy may not follow the American way to restrict the Chinese company invest in Russia. I hope we can do, after become the biggest partner of the trading and become the biggest partner of the investment. Thank you.
Спасибо большое за ваш комментарий.
Thank you very much for your comment. Now, dear colleagues, I would like to, in conclusion of our today's panel, I want to thank all of the participants. And thank you all for your participation. I also want to hope that our information was interesting and useful for all of you. I want to thank for your questions, because indeed only when you raise serious legal issues, only they can help you go ahead, make progress. And thank you very much once again, and good luck to all of you guys. Thank you.
Thank you very much. Thank you very much.